Good afternoon, everyone, and welcome to Stock Market Today for Monday, March 10th. It's Alissa Coram here, and stocks taking another beating today as the trade war continues to heat up. And some comments from Trump over the weekend did spook the markets a bit more. And here now to discuss is my colleague, Justin Nielsen. Justin, what do you have for us today?
Well, it's an ugly market. I think we're done. Anything left to say? Or, but yeah, we'll take a look at a few stocks and hopefully get some lessons from what we can learn here, because eventually this is something that we expect we will pull out of, and we want to be ready when it does. So we'll take a look at some things that are setting up well. CME, which was stock of the day today. There's also in the medical space. Cencora, I'm not sure if that's how it's pronounced, but that's how I'm pronouncing it. Ticker symbol COR there. And then also, just as a reminder, things can look good until they don't. We'll take a look at Stride, which is LRN.
Yes. All right. Well, we will check out those stocks, but first, let's take a closer look at the major indexes. The NASDAQ today taking a hard hit, down 4%, I'm seeing on the day. That's a big number. Big percentage. The S&P 500. The
She
S&P
checks her notes, make
500.
sure that that's correct.
Yeah, I had to do a little double take there. When you're in cash, you're not looking at the percentages really until the
you,
end of
you
the
don't realize
day.
how bad it is out there,
Yeah,
right?
at least in my case. The S&P 500 today down 2.7%. The Russell 2000 off 2.4% or so, headed into the final stretch there. And the Dow down 2.1% on the day, now down to its 200-day moving average there, joining the other major indexes that already tested and broke below those levels. So Justin, so funny that you said, all right, the market's terrible. We're done here. I think that right now is a great time to be engaged with the market, even though we're seeing all of this destruction, because even though it's a lot more fun when the market's going up, I think times like this show why it's important to stay in step with the market every day, because conditions can change so quickly in a matter of days and weeks. And so I think for folks who have been watching this show every day in 2025, we've pointed out those warning signs, right? Even when the NASDAQ and S&P were at highs, how growth stocks started breaking down. So here now, all right, where do we go from here? There's a lot to think about. So what are you thinking about in this market?
Well, one of the things I've learned after, doing this for a while is to be okay with being in cash, to be okay sitting on the sidelines, not feeling like you have to do something every day. And for someone that enjoys trading, sometimes that can be hard. You feel like, oh, in what way can I solve this puzzle a little bit better, get one little bit of an edge? And it's I think important to recognize that, yes, you can be right on your individual stocks here and there, but overall, the odds are just against you. So if you're really out there to be improving your portfolio, this is a time where you can improve your portfolio by not letting it go down. Because it's very easy in a correction to get out at a certain point, and then all of these times you get back in, you just whittle away your account, and before you know it, you've actually taken a much larger hit. So this is something that I have experience with. When I first started out, 2001 and 2002, saw quite a lot of damage as I kept on trying to get in and make some progress after loving what was going on in the late 90s. So now I've kind of learned from that mistake, and I let things settle down and don't try and second guess the market. When I see a downtrend like this take place, I wait. I try and be very patient, and that has served me well in terms of not letting a small drawdown turn into a large drawdown. And drawdowns are expected, but how large it is makes a big difference on where you start the next time around when we have a market that is in full phase bull mode.
Absolutely. We talk a lot too as active traders about the 21-day line and being in a power trend. So it's been a tough choppy market since mid-December, and things really changed a couple weeks ago when we started breaking. So those were sort of the warning signs for us. And then in terms of levels to watch here, the Nasdaq now below 18,000, and at today's lows, let's see, let's draw the line, as it were. You know what? I find this interesting. We're now back to that bullish day that we saw in
September 11th, right?
mid-September. So
Yeah.
this also just goes to show, if you can, be successful when the market is in an uptrend, and then recognize the signals to at least start backing away. No one's going to pick a top or pick a bottom, but making those incremental decisions can help you keep that hard earned money from those uptrends. And that's
Yeah.
what we want to be doing.
Because the last thing you want to do is see all those gains from September just get whittled away, and that means that you are not making progress. So at the end of the day, if you can, again, you're not going to sell at the top, but if you can maybe take a
Mhm.
5% hit, I mean, right now we're down what? It's getting close to closer to 15%. We're well below 10% at this point,
Right.
off the high, and it's on its way to 15%. So this is, again, it's just getting worse here. Even from on the Nasdaq Composite, if you took where we were on Friday's low, we were down like 9% from the close of February 21st, and that was already off the high.
Right.
So again, things have gotten definitely worse. And look, if you look at overall, if you had gotten in, back in 2022 in October or January, somewhere there, you're still up considerably. But this was a very powerful rally that we had since September, with some
Mhm.
phenomenal winners like AppLovin, Palantir. There's been a whole host of stocks that really made big differences in portfolios. But if you give it all away, what's the point? There's all that kind of wasted time. And you've got two levers going for you when you're compounding. And everyone knows that compounding is such a powerful force for growing your portfolio. But the two levers you really have are your performance and time. And
Mhm.
wasting time,
Mhm.
that doesn't do you any favors. And if you get great performance, but you give it all back, that doesn't do you any favors either. So if you can do anything to kind of get those a little bit stronger, it really helps your compounding over the long term. And at the end of the day, we really are in this for the long term. We're not really trying to do too much on the short term. Oh, let's see if we can knock it out of the park this one time. It's, can we sustain? Because we
Mhm.
know that being in this game for a long time is what really pays off. And so you've got to survive.
Yeah. Well said, Justin. And we've talked a lot lately as well about the 200-day line or the 40-week line being a key long-term guardrail. And as of now, of course, it's only Monday. We are on pace for a second weekly close below that level. So that's another signal to watch, Justin. I think that's why this week is a very critical week. Are we going to have some sort of oversold bounce that can develop into something more on the upside? Or is it more of one of those situations where, hey, we bounce and then roll? So, a critical time here, I think, for investors to be paying attention to what the market is doing.
Yeah, and to be clear, that doesn't mean that you don't do anything
Mhm.
until you see that break. We've been talking about how we were scaling back, really, starting on February 21st in this latest rally, maybe even a little bit before, because some of your,
Mhm.
individual stocks were getting hit before that.
Right.
Axon is the one that comes to mind as being yeah, at
Mhm.
least for me personally,
Yeah.
a big
You
hit that
you
I
had
had
December
to,
18th, you had
yeah,
DeepSeek Day, you had one of the first big tariff down days. So there were
yeah.
some other days in there too.
Yeah,
Mhm.
so there's been a lot here that we've, noted for a while that has made this seem like, oh, this is a market that needs more time.
Mhm.
Now, as you saw that weekly chart, you could see how back in August we got, the August 5th yen carry trade did get support right there at the 200-day moving average line, the 40-week moving average line. If you are looking back, to the 12,500 level, we got support. So the fact that we've lost support here does mean that we probably will need a little bit more recovery time. And that could also mean that, to your point earlier to start the show, that means you have to spend a little bit of extra time looking for the next crop of leaders, because a lot of times when you get that support and you come right back, you can kind of gravitate towards the old leaders because they're not quite done yet. But sometimes when
Mhm.
you get a little bit more of a serious correction, it kind of cleans the slate and you have to start fresh with a new
Right.
crop of leaders. So it remains to be seen who those leaders are going to be. We won't know until they really start formulating their bases and breaking out, and having strong relative strength. So right now, it's when you are trying to get that feel for what is emerging, and doing the research on some of the stories of what could be coming down the road, and that's where you're going to be successful for the eventual turn that we see in this market.
Mhm. Absolutely. Well said there, Justin. Quick look at the S&P 500 on the weekly. We closed pretty much dead right at that 40-week line, now losing ground there as well here. Let's also take a look at the 10-year Treasury yield coming off here today. But I think there are a lot of concerns on the economic front. Even before this trade war started ramping up, you had investors having almost a hypersensitivity or a knee-jerk reaction to any and all economic related headlines. So now it seems like the trade talk now, traders are also factoring that in. So we're keeping an eye here on the 10-year yield off today, holding above recent lows, but still in this short-term downtrend. So it'll be interesting to see what happens there, Justin.
Yeah, and again, this just goes to prove that, like, sometimes you look at something and you start getting in a mindset of, oh well, when this is going up, it's bad for stocks, and when it's going down, it's good for stocks. Right now,
We've broken
it's
that.
yeah, that's it's not giving you any sense there,
No.
but there are the recession fears that are
Mhm.
growing here, and that's something that I don't know. It feels like a sensitive market, right?
Yes.
After the 50 basis cut that the Fed did back in September, it seemed like we weren't as so strongly focused on every little economic report. And then December 18th, that kind of changed with the
Mhm.
Fed meeting on that day. And we saw a big hit there. And since then, it just really seems like there's a lot more sensitivity to these
Mhm.
economic reports. And,
Right.
you know, look, we went through this before in the first Trump administration, where there were the concerns about a trade war with China, and that did lead to some uncertainty and some market volatility. And we're seeing that again. How this plays out, I don't know. When does it turn? I don't know. But if you watch the
We'll know it
market,
when we see it.
yeah, we'll know
In
it when
terms
we
of the
see it.
odds, right?
Yes.
There's no guarantee, but we'll know when
Yeah.
the odds improve.
Yes, and
Yep.
and that's why we also want to make sure we stay engaged with just the market.
Mhm.
It doesn't necessarily mean that we have to watch it like we normally do, but at the end of the day, we're going to see, okay, what did it do today? Did it provide any sign of support? Like the S&P 500 on
Mhm.
Friday looked like it was getting support on the 200-day moving average line, and then today it kind of loses it. So that's giving you information, and you use every little bit of information to give
Right.
yourself an edge. One other thing, the VIX, if we just take a look at that real
Mhm.
quick, we talked a little bit about this on IBD Live this morning. This is it's known as the fear index, but it's really just kind of implied volatility based on the options market, and this has been getting up there higher, so
Mhm.
to one of the highest levels that we've seen in months, and certainly elevated. If you go to like a monthly chart, you can kind of see that we're at you know pretty elevated levels over the last 10-year period. The
Mhm.
usually kind of below 20 or below is where we've been a lot of times on the lower end of our historical range, even below like 12. But we're kind of at a higher point right now, and so there is a little bit more uncertainty. That's kind of where the
Mhm.
fear index comes in there, and this is reflected in the VIX right now. So
Right.
this can be a signal that as it gets excessive, that maybe a bottom is
Right.
forthcoming. But the warning is that this can get a lot higher before it starts coming down. So be
Right.
be careful of that.
Yeah. And I feel like we talk about over 40 or 45
Y-
sometimes as well, Justin, but
mhm.
we'll have to see what we get and secondary indicator that we're going to continue to keep track of. Let's take a look at some ETFs. and their
Yeah.
action today. XLU, a traditionally defensive sector, up 1.1% on the day. Healthcare, also defensive, down today, but that relative strength line as of late
Yes.
has been moving on up. I'm sure that's why you wanted to point it out, Justin. I'm just going to run through these and you can give me your thoughts. Similar action with consumer staples. That relative strength has been surging lately, down fractionally on the day, but still, if money in general in recent weeks is flowing to the staples like we've been seeing, that's your risk off area. That's your defensive market vibe. And then the opposite, Bitcoin, we've been talking about this as a risk on asset, especially in the wake of the election, had a big move there. Now down 9% today. It's been taking a beating recently, Justin.
Yeah. So, yeah, if you're looking at relative strength, you can see right now where the money is flowing. What is, outperforming is in the defensive area, and anything that's kind of associated with more risk is losing it on the relative strength. Now, that is expected to change as the market starts to turn, but it does let you know where we're at right now.
Mhm.
And I'll be honest with you, I just can't really recall any markets that I've been involved with where the utilities, staples, we're
Beatable
leading.
market.
Healthcare, I have seen that
Yeah.
before, and utilities. Look, we saw that recently,
With the
with kind of
AI
the
thing.
AI
Mhm.
adjacent plays. But when you get the three of those, that's kind of,
The
I don't know.
trifecta,
Yeah,
defensive trifecta.
exactly. Trifecta of doom.
Yeah.
But again, short term, right? We do expect to pull out of this eventually, but it does kind of tell you where you need to be right now,
Mhm.
either in cash or really defensive. For those that need to be invested, like institutions, you can see where they're going. They're going into
Yep.
those bunkers where they can hide. But for us as individual investors, cash is just fine.
Absolutely. All right. A good sense there of the market's mood right now. Let's take a look at some stocks. Here's CME. Absolutely bucking the market weakness here, up 3% on the day, continuing a strong uptrend, a slow and steady stock, but recently getting into new all time high territory, Justin.
Yeah, so this kind of speaks to our conversation on the VIX. When you have extra volatility, sometimes you have your trading markets. They benefit, right? There's that trading with either hedges, derivatives, things like that people are using to kind of protect themselves. And so
Mhm.
CME is benefiting from that. Harrison did a great article on this. This was our stock market today. Harrison Miller, one of our
Stock of the
reporters.
day.
Stock of the day, yeah. Did I say stock market today? Yeah, stock of the day,
Yeah, you
IBD stock of the day, CME Group by Harrison Miller, and yeah, he talks about that. What the volatility does for this, how it does well, and they just recently reported some increases in their average daily trading volume year over year for February, a 12% increase,
are.
a record-breaking 67.1 million contracts that traded on February 25th. So there's a lot that is going on the trading side. And if we switch to the weekly real quick, something that I had not even looked at until I read Harrison's article, this actually has a dividend yield. A decent 4% plus dividend yield, and it's been growing. So a lot of times, I'm a little nervous when I see a very high dividend yield because the stock has come down so much. It's like, okay, well, you just decreased your denominator, and that's how your dividend yield got that high. But this is a case where you're at highs and you still have a very, very healthy yield here. So this does provide a little bit of income as well as that capital appreciation. And just kind of as a revisit, we have been talking about a lot of members in this group for a while. ICE was our stock of the day on Friday. CBOE has been one that we've been talking about a lot recently that's been looking good. So this is an area that is holding up really well. Insurance is another area that we've been talking a lot about lately, whether it's Allstate or even Berkshire, the Berkshire B shares. This has been an area that's holding up, and you can see that with the relative
Mhm.
strength. So yeah, just one of those areas, two areas that have been holding up very well in the growth area.
Mhm. Now, in terms of just super quick, because I know we need to go, in terms of it being viable, that's the struggle here, right?
Yeah,
Is this isn't really a proper buy point that we would
right. It's
typically
extended.
consider.
And the other part here too is, okay, for most of us, because we don't have to trade, uh, why would you want to kind of stick your neck out in this environment? So we'll get to some examples of that, or an
Yeah.
example of that at the end here. But that's kind of the warning, is you have to be very careful, because you can have a lot of stocks that look good. On the defensive side, what you would expect is, if we start getting a market that turns, then guess what? People are going
Hmm.
to start looking at their defensive positions and pull money out of those. So
Rotating.
you're going to quickly see a rotation there. So that's the other part that you have to worry about, is how many of these are defensive, how many of these are kind of taking advantage of a short-term thing that's happening with the volatility. And then if things shift and get better for the markets, you might see the money just pull out of these very quickly.
Yep. Okay, let's go to COR. We talked about XLV in the healthcare sector being an area of strength. So here is a medical sector name up 2.7% today, Justin, ticker COR.
Yeah, I think they did announce some updated guidance, and that was a good surprise for folks. Look, this is a healthy stock, very stable. You see that earning stability of 2, and a decent EPS growth rate of 15. Another group member in here, McKesson. You can see that right on the top RS in the group, in that box right there. McKesson is also one that's been looking strong. AbbVie, ABBV, that is looking good. So there's a
Mhm.
lot of these medical slash healthcare names that are
Right.
looking strong. And this is an area where, again, sometimes it's defensive, but sometimes there can be these growth stories that
Mhm.
are worth watching. And so again, this has been going back and forth a lot on Cencora, but it's notable that the relative strength is starting to improve here, that you've got a lot of group action that is looking strong in this medical space, in different areas, whether it's the medical wholesale drug suppliers, some of the equipment, and we noted XLV, the strength in that ETF as well. So there are some green shoots here. And then you have also the biomed biotech, where you can get a lot of growth names there, because there's just
Right.
amazing things happening in the medical space. So yeah, I think it's always a good place to look at. This is one of the places, retail, leisure, and medical were always things that Bill O'Neill, the founder of Investors Business Daily, used to gravitate towards, because he had such great success. One of his biggest winners in the medical space was Amgen,
Mhm.
decades ago. And, he always remembered that this is something where you see innovations
Right.
regularly, and it's worth kind of keeping an eye on these.
Yeah, a great note there. Okay, well, let's wrap things up with a look at LRN. Uh, Friday, it did close off its lows, but it was still a very ugly day for the stock that up until Friday had been holding up great, Justin. But last week, ultimately down 9% plus, almost 10%, slicing below the 10-week line in above average volume.
Yeah, so this is kind of a lesson and a cautionary tale. I was in this stock myself, and it was just one of those I was holding because it wasn't doing anything wrong. So
Mhm.
okay, I as I was starting to cut and pare back my positions, the first ones off the boat were the ones where I was taking losses, or where they were breaking lines of support. But this one was holding support until it didn't, and it's kind of a reminder that a lot of times they will come after everything. So you might be thinking, oh well, this is looking fine, this is looking fine, and then boom, they come after a lot of things. So this is just one more reason why sometimes having that larger cash position is better when you have this market volatility. It's better to just be on the sidelines. Again, if as individual investors we can do that, it might not be fun, it might not be as exciting,
Yeah.
but at the end of the day, it'll protect your capital so that you have more of it when we turn around.
Right. And this one was really tough because it had so much going for it until it broke, right, Justin? You had the ants showing really strong price performance, a number of days up in a row, or 13 out of 15 plus in volume. It had a great earnings report, and the RS line hit a new high just several days prior to breaking, even before the stock was hitting a new high in price.
Yeah.
So things like this are tough, but it is indicative of the kind of market that we're in.
Well, and it's also a good reminder, because if we go to the weekly chart and we look at the earnings line is a nice steady uptrend, 50% EPS growth rate. for an annual growth rate over 3 to 5 years of that magnitude, and like the earning stability isn't spectacularly low, meaning more stable, but it's
For that
not.
kind of growth,
Yeah, for that kind of growth,
relatively
it's not bad, and you can
stable
see that
enough.
again reflected in the earnings line. But it's a good reminder that things often will look
Mhm,
good at tops, and you can't wait. Even the ratings, you got an
mhm.
EPS rating of 99, composite rating of 99, RS rating. For as much as this is off 16.7%, it's still at a 97. So just remember, a lot of these things are going to be slower to react. You have to look at the chart. The chart is going to tell you, hey, something's going wrong here, and the chart will help get you out long before these ratings, the earnings, or
Mhm.
any of that will reflect potential problems with the company.
Yes. Great to point out there, Justin. Thank you so much as always. We appreciate it. Good stuff.
Good to be here. Thanks, Allie.
Yeah. And you'll be able to see Justin tomorrow at 5 p.m. Eastern on our Swing Trader status update show. So that'll be a lot of fun. Thanks for tuning in, everyone. That is it from us for today. But we will be back with more tomorrow morning on IEBD Live starting 10 minutes before the opening bell. Investors.com/IEBD Live for all the details on that. We will see you there. And then we'll also see you right back here tomorrow after the close.